So Waste Management, you know them, the big green trucks, they take all our trash. Essential service, very much needed. The world can't function without it, right? You can't function without these guys doing the hard work they do to go out here, get our trash, clean up our homes, our neighborhoods, our cities. So big shout outs to them. But definitely an essential business, right? It's them. You got RSG. You got some other names in the space. Those are two tickers off the top of my head that I know the most of. But also, we know Waste Management is the king of this all, right? So Waste Management year to date is flat, only up 1%. Currently trading at 216. We do see that they hit that 10% level. And then same thing, daily screaming by me. We got the weekly chart, 100. There go that number again, the 100 SMA. We at the level, right? Go ahead, hey, let me go ahead and see what's going on with this. Buy it. So again, not financial advice, not saying what to do, but this is how I believe you should go fishing, go looking in that situation, looking for companies to go ahead and put your capital to, right? So let's go ahead quickly go over to stock analysis. This is giving a hold, right? But we know Waste Management is a high quality defensive compounder with durable free cash flow and a dominant market position in the U.S. waste services industry, right? So saying at current valuation multiples that remain elevated relative to historical norms. The risk reward does not yet favor aggressive accumulation. So again, as we mentioned before, all the entry points, right? These are entry points. This is not saying load the boat. This is not saying throw your life savings. We never said that. Do not recommend it. But these are opportunities for you to consistently pour money into build positions, right? Build your foundations. You're never trying to catch the bottom on anything. That's me. So I definitely feel like that's a nugget. A lot of people should go through it when it comes to investing. So America's dominant trash to cash machine. Waste Management leverages an irreplaceable network of landfills, transfer stations, and recycling infrastructure to quietly compound returns while the rest of the world generates more waste every year. So again, we got the wind built in. We have people on the planet that's going to continue to waste, throw away trash. This company excels at collecting that trash, whether it's recycling, getting rid of it, this and that. They're the ones that handle it all, right? So that's why they win. Strengths, unmatched physical infrastructure moat. They operate the largest network of landfills, transfer stations, and recycling facilities in North America. Assets that are nearly impossible to permit and build today. So basically that's that infrastructure layout, right? They've already, same thing when you look at Tesla, you look at the supercharging network, they already did the hard work, got the network in place. Look at Waste Management the same way. Apply the tech mindset to a company that isn't tech. They got everything already built out. It's going to be hard for the next man up or next company up to try to come ahead and duplicate this. You can probably take some market share. Here, have my pennies, have my quote unquote, have my trash. But I'm winning. I got the majority of everything. I got the most of this total addressable market. Nothing you can really do. So they have the competitive barrier that keeps pricing power firmly in management hands and supports a 40% gross margin. Very good to see that, right? So consistent cash generation despite capital intensity. So this is the trailing 12 months EBITDA. So this is the earnings before interest, tax, deductions, and amortization, if I remember correctly. So $7.66 billion in free cash flow, $2.14 billion. So again, free cash flow, every time we see that number positive, that is good to see. Because again, that's money you can do whatever you want with. So demonstrate the business's ability to convert revenue into real cash. So that's for dividends, share buybacks, and the transformational $7.2 billion acquisition of Stericycle in 2024 that they did. So again, you like to see free cash flow because again, company has opportunity to do stuff, right? Beta. This beta is crazy. 0.49%. Or 0.49, I should say. The volatility is almost non-existent, right? So this is what I mean by a defensive stalwart in your portfolio, right? Volatility is a poor man's best friend, right? In terms of if you want a stock to move up and down wildly in price and you can stomach it, you're trying to hurry put a couple dollars in, double your money real quick and get out, cool. But if you want something that's going to hold your portfolio, keep its value for the most part, something like this, a beta of 0.49, that's crazy. It moves half of what the market does in terms of volatility, right? So the market can be in free fall. This is barely going to be in free fall. That's basically what it's trying to say, right? So perfect. Acts as a portfolio shock absorber, right? Beautiful to see that. And then we see the grew revenue 14.2% year over year. That's always good to see there. Let's see, strong institutional conviction and annual support. So 86.2% institutional ownership. So that means like, your big guys, right? Your big companies, your big institutions have a strong stakeholder inside the company. And then you got 19 out of 28 analysts give it a buy or strong buy. And obviously they get their price targets here. So let's go to weaknesses. So highly leveraged, which limits their financial flexibility. But again, we've seen over here, they do have some type of financial flexibility, but probably not as much as you would like to see, right? So definitely, something that you have to pay attention to, but doesn't really concern me, right? Let's see. Let's talk about the cash flow isn't as large as we would like to. It's only, $2.14 billion. But, that's basically because of CapEx. And then they have a telegraphed of $3 billion or more in annual CapEx through its automation and recycling infrastructure build out. But again, this is a weakness, yeah, but it's going into something that is a growing industry, which is the recycling infrastructure. A lot of people do care about recycling, and also basically you can see how it's going on the planet, right? We're doing a terrible job in terms of recycling, reusing, and now the next layer, I feel like when you dive into recycling, it's gonna be recycling the recyclables. So it's like I recycled this, gave it a second life, but we have to try to figure out ways to get a third, fourth, fifth life, infinite life out of these things, right? So that's going to be, I feel like, the next level of trying to make things sustainable, like true sustainable. Because truly sustainable, I feel like it goes back into the ground and, contributes back to the earth, right? It's not how people are doing what the sandals and they turn into furniture, stuff like that. That could kind of be sustainable, but if that gets thrown out, it can't, go back into the ground. It's not going to decompose and all stuff, those type of things. The people who develop that and figure out that type of situation are going to win. So this whole industry right here, I feel like is a big win, right? And also they're going to be a company that's going to be leading that, be a big part of that, right? So that says they have thin net income growth, which, yeah, we see that. But it's nothing, again, like for the financial part of it, I'm not too concerned about all that, right? And then low insider ownership signals limited skin in the game. So again, it's another thing looking at our executives buying, things like that. We'd like to see more of an executive stake, whether that's from officers, CEO, C-suite level people in the company, right? So then we got the threats. Prolonged high interest rate environment pressures, the balance sheet, of course. So high interest rates makes it more expensive to try to borrow money, and also for a company like this that's capital intensive in terms of building things out, they are going to operate with debt. So higher interest rates means more expensive debt, right? That's not something you want to see. They don't go hand in hand. But again, flip it on its head, when interest rates get cut, which they probably are going to be under wash, you're probably going to let Trump talk into his ear, cut rates. That's going to be a beneficial situation to them, right? So this can get flipped on its head too. So we got competitive pressures. Like we said, we mentioned RSG before, they're the second player in the space. They do, offer some threats to it. They got their own stuff going on, right? They're going to do their own R&D. So they're investing in infrastructure technology. Obviously, we expect that, right? Again, we want to control majority of the space. You don't need to control all the space, right? So regulatory and environmental liability risk, of course, this is going to be big. What are they doing with the landfills? How are they making sure that things are being taken care of correctly, right? Clean Air Act, all these type of things, right? We're not make sure we're not burning the trash, which is adding methane gas to the, you know, ozone layer and all that stuff, type of stuff, right? They're gonna be for their whole life underneath that microscope. So that could lead to fines. That could lead to, you know, getting your hands tied behind your back about what you can and can't do, what businesses you can acquire, what businesses you need to sell. So that's always going to be a type of risk when it comes to this type of company, right? Because they affect the environment, right? And then we got the commodity price volatility and recycling revenue. So spot market prices, right? So for cardboard, mixed paper, plastic, metals, which could swing dramatically, right? So situation if they're getting paid X amount of dollars for cardboard, they're trying to say if they're making $100 off of cardboard last week, next week they could be making $70 off of it. Just me throwing a random number out there. So they're saying that swing in commodities is a threat to them. But it depends on how much of a threat. If it how can I say this? It's only a huge threat if this is like a huge part of their revenue model, which, you know, it plays a part in their revenue and how much money they make, but it's not going to make or break them, right? So opportunities, obviously, renewable gas or renewable natural gas, RNG, and landfill to energy is a multi-billion-dollar secular tailwind, right? So again, having their hands on this and be able to flip that around, how can we go ahead? Landfill to gas, that sounds crazy. And then if you see it working in action and it does benefit, people are paying the money for that, the energy companies that may need this stuff like that, that's a great situation for them because who owns the most landfills? Them. They have gold legit in the version of trash that they could turn into gas, which is liquid gold for majority of companies around the world, right? So we got the Stericycle integration. So it gives them opportunity to unlock a $6 billion medical waste cycle. So Stericycle, you know, they got the medical waste. I think they got things with the needles, all that type of stuff that they have access to, right? People need a way to safely get rid of medical equipment, things like that, or medical waste, right? So got recycling technology and automation as a margin expansion driver. So got that going for them, and obviously population growth, right? That's we need people. People are going to keep this growing, even if, you know, the future changes and all, we got humanoids and this and that, or whatever it is. You're still gonna have trash. You're still gonna have waste, and that needs to be taken care of. They're like a forever company. Like I don't see them. They're not gonna go out of style. They're not going to, you know, you're not gonna look at it like, damn, why do I own this? That's my personal take on it, right? So down to the wolf catcher take. And after this, we're gonna be wrapping it up. I know it's kind of a long, drawn out video, but I do like doing these deep dives, and that's just me. Hopefully, you know, you can sit through it, consume the information. But this is like an insight into the type of research I feel like that goes into researching the company, understanding why it should be part of my portfolio, why it shouldn't. Do I think I could own this for 5 years? What's the cycle look like? What environment are we in right now? It's just, like I said, it's amazing to go ahead and do these type of things and to look into it. And this is what I do in my free time. So this is how I feel like people should go ahead and look at things. And like I said, tools nowadays make all this so much easier for you. Like I said, you go to my website, do it, and this gets generated for you. You can use Gemini, ChatGPT, Claude, Perplexity. Like I said, all these tools are available to you. YouTube, there's other creators out there that are creating the content. Obviously, cross-reference, go check again, double check for everything, right? Don't trust one source on nothing. Always go ahead and do your research. But it's amazing when you start doing the deep dives and understanding things. So to take on it. So both waste management kind of business a long-term investor can own and largely stop worrying about. Again, you go sleep, wake up 10 years later, be fine and happy, right? It collects, processes, and monetizes garbage for an economy that never stops producing it, backed by physical assets no competitor can replicate overnight. Again, it's that moat. No one's going to just come over here and build 30 to 100 landfills and be like, hey, I'm your competition now. It's not going to happen, right? Again, 40.6% gross margins. That EBITDA 7.66 billion. The beta of 0.49. Talked about that. But again, we have that worry about the load of the debt load, because about when it comes to financing, stuff like that, when it comes to interest rates. But we know we're okay with that. Stericycle integration, the heavy CapEx costs that come with it. And then let's see over here. Yeah, so we're treating any pullback towards that support zone, basically the 205 to 210, as a gift from the market for a business that will still be picking up your trash long after most of today's hot growth stocks are forgotten. So again, pivoting away from AI, infrastructure, data centers, this and that, who's going to win, who's the next up. That's where we're pivoting away from. That's why we're going ahead, diving into these opportunities that the market, has forgotten about. So look at this last chart to wrap up. So we'll see here on a daily 194.11, 248 was the most recent high for it. And then you see that here we're underneath all moving averages. So again, situation on a daily, hey, buy me. We see the 100-day SMA, huge obstacle, right? Got right to there and then fell apart. Same thing for the 50. Got there, fell apart. Let's go ahead and look at the weekly. So the weekly, right underneath the 100 SMA for on the weekly. Again, same story as we mentioned before. Needs to break above these, hold, and stay above. And then that's where we're going to go ahead and get some opportunity, right? In terms of it rolling back up to 248 to all-time highs or to break above it. But again, great company, great stock.